Hey tech investors, ever feel like your portfolio is riding on the back of one giant company? Today, we're diving into Credo technology, CRDO on the NASDAQ, a connectivity company that's making serious waves in the AI space. But there's a catch, a big one. Is it smart to put almost all your eggs in one basket? I'm talking about Amazon. Is Credo's dependence on Amazon a brilliant strategy or a ticking time bomb? Let's find out. Let's get straight to the numbers. Credo just announced that a whopping 86% of their revenue last quarter came from Amazon Web Services, or AWS. That's huge. They beat analyst expectations, reporting earnings of 25 cents per share against an expected 18 cents. Revenue soared to $135 million, crushing last year's $53 million. They're projecting even bigger numbers for the next quarter, between $155 and $165 million. The stock rallied initially, but then took a hit, down over 15%. Why the roller coaster? The market is nervous about that reliance on a single customer. Wall Street is all over the place on Credo. Needham reiterated a buy rating with an $80 price target. Roth MKM is also sticking with a buy and an $80 target. But Susquehanna is playing it safe with a neutral rating, lowering their price target from $80 to $60. What's going on? Analysts are acknowledging Credo's impressive growth, but they're also worried about the concentration of their revenue. It's a classic risk-reward scenario. High potential, but also high stakes. Needham analyst Quinn Bolton points out that Amazon's ramp-up is far more substantial than initially anticipated. He's significantly raised his shipment estimates for fiscal years 2026 and 2027. Amazon is hungry for Credo's technology, especially as they build out their AI infrastructure. But here's the million-dollar question. What happens if Amazon decides to bring that technology in-house, or switches to a different supplier? That's the risk the market is pricing in. Credo's management knows they can't rely on Amazon forever. They're actively working to diversify their customer base. The goal is to have 3 to 4 hyperscaler customers contributing more than 10% of revenue each, starting in the next quarter and continuing into fiscal 2026. They're already seeing traction with Microsoft and xAI, and they're in the process of qualifying with 2 additional hyperscalers who could ramp up in fiscal 2026. This diversification is absolutely critical for Credo's long-term success. Credo's product portfolio is also expanding. Their PCIe retimer product line has been certified by the PCIe SIG and has secured a commitment for an ODM AI platform, with revenue expected in calendar 2026. They're also showcasing their PCIe AECs, active electrical cables, for scale-up networks. These are key technologies for high-performance computing and AI infrastructure. Let's break this down. A retimer, in simple terms, cleans up and amplifies signals in high-speed data transmission. AECs are like supercharged cables that allow for faster and more reliable data transfer. Think of them as the plumbing for the AI revolution. Here's where things get really interesting. Credo expects Microsoft to ramp back up to a $100 million annualized run rate in fiscal 2026. That's a significant opportunity. And then there's xAI, Elon Musk's AI company. One of Credo's hyperscaler customers, believed to be xAI, is receiving significant GPU allocations from NVIDIA. This could lead to a strong revenue ramp for Credo from xAI in the coming quarters. xAI is the wild card here. Their ambitions are huge, and if they succeed, Credo could be a major beneficiary. Roth MKM analyst Sajiva De Silva believes that Credo is perfectly positioned to benefit from the continued growth of AI infrastructure. As AI models become more complex and data centers become more demanding, the need for high-speed connectivity solutions will only increase. Credo's leadership in this space gives them a significant advantage. The key is to capitalize on this opportunity and expand their customer base beyond Amazon. Roth MKM is projecting that Credo will achieve earnings per share of 34 cents on revenue of $311 million in fiscal 2025 and 65 cents EPS on revenue of $456 million in fiscal 2026. These are aggressive growth targets, but they're based on the expectation that Credo will successfully diversify its customer base and continue to innovate in the high-speed connectivity space. Can they deliver? That's the question investors are asking. Credo's CEO, Bill Brennan, emphasized that their customers are choosing them for their most complex connectivity needs, thanks to their customer-centric focus on innovative, high-performance, and energy-efficient solutions. But what does this all mean? Let's dive a bit deeper into the tech. Credo uses advanced modulation techniques like PAM4, pulse amplitude modulation for level, to cram more data into each signal. Think of it like sending coded messages, PAM4 allows you to send 4 different messages with each pulse of light, instead of just 2. This is crucial for achieving the bandwidth needed for AI applications. They also focus on power efficiency, which is a huge deal for data centers that are trying to reduce their energy consumption. A key publication to look at here is Energy-Efficient High-Speed Serial Links for Data Centers by researchers at Stanford, published in the IEEE Journal of Solid-State Circuits. It highlights just how critical power efficiency is in this space. This article is just one example of the academic research driving innovation in this field. Credo is applying these principles in real-world products. Okay, let's get to the heart of the matter. The bull case for Credo is that they are a leader in a rapidly growing market, with strong technology and a proven track record with major hyperscalers. They are successfully diversifying their customer base and expanding their product portfolio. The bear case is that they are too reliant on Amazon and that their future growth is uncertain. Competition is fierce in the connectivity space, and there's always the risk that a larger company could come along and disrupt the market. So, how do you decide which case is more likely to play out? One thing you can do is track Credo's progress in diversifying its customer base. Are they actually signing up new hyperscalers and generating meaningful revenue from them? Another thing to watch is their R&D spending. Are they continuing to invest in new technologies and stay ahead of the curve? Ultimately, the decision to invest in Credo comes down to your own risk tolerance and your belief in their ability to execute their strategy. Now, let's address the elephant in the room, the Amazon risk. Some argue that relying so heavily on one customer is a recipe for disaster. But there's another way to look at it. Amazon is one of the most demanding customers in the world. They push their suppliers to innovate and deliver the highest quality products at the lowest possible prices. By meeting Amazon's rigorous standards, Credo has proven that they can compete with the best in the industry. This gives them a competitive advantage when they go after other hyperscaler customers. In other words, being a key supplier to Amazon is not necessarily a weakness. It can be a strength. It's like saying that Ferrari is a bad car company because they only sell to rich people. The reality is that Ferrari's success is a testament to their engineering excellence. So, what's the verdict on Credo? They're a high-growth company with a lot of potential, but also a lot of risk. Their dependence on Amazon is a valid concern, but they are actively working to diversify their customer base. Their technology is cutting edge, and they are well-positioned to benefit from the continued growth of AI infrastructure. Ultimately, whether or not you invest in Credo depends on your own investment strategy and risk tolerance. What do you think? Is Credo a buy, a hold, or a sell? Let me know in the comments below. And don't forget to subscribe for more in-depth analysis of the latest tech trends. Thanks for watching.